March the 21st, about 10 minutes of 7 a.m. Pacific time. And I want to go over a trade I put on in gold. This is a one-day candle for gold futures and June expiration, by the way, in this futures contract. And as we can see, gold has been rallying quite a bit. Recent lows, if we go back to the 28th of February, the low that day was $2,872.40 an ounce. And it's currently trading about 163-ish higher from the low on the 28th of Feb. Anyway, I was under the inclination, and honestly, this was mostly just old trader spidey senses, which at best, might be right 52% of the time if I'm hot. So roughly 52% of the time, I'll be right 100% of the time when my spidey senses are running hot. Fortunately, this seems to be a lucky day for me because I put this trade on, well, at least a decent start. I put this trade on about 10 of 6 a.m., so roughly an hour ago. And the way I structured this, I went to the April 24th expiration, so 34 days away till it expires, 34 DTE. And I went down to the 3,000 strike. I bought one there. I sold two, and these are puts, by the way. I sold two at the 29.65 strike, and I bought one at the 29.40. So this broken wing butterfly, and note that the longish side of this put spread is 35 wide, and the short side of the spread is 25 wide. So I have an extra 10 here to work with on the long portion of the put spread. And the prices I paid for these, and this includes these prices that you see on this Excel sheet, include whatever commissions and fees I paid. So 27.34 for the 3,000 strike, and I gotta add this in, 3,000. Put 18.36 for the 29.65. And 13.84 for the 29.40. Okay, so the total is 447.88. Now I forgot how expensive it can be to trade some of these futures contracts. This should be really the prices were 430, but it added up to another 17, almost 18 bucks in commissions and fees. So this is not a cheap contract to trade. However, it is a big contract. And if we look at gold here, note that the trade price is $430. So that should be $430. And once again, it did cost me more than that, almost an extra $18 in fees and commissions. Again, quite expensive. So you don't want to fiddle around with these for small moves. If you do get involved, you want them to be bigger moves. But anyway, for whatever reason, gold is acting like I'm bullish, and it is currently down almost $27 on the day. So apparently the futures market in gold misread what I did. Down almost $29 now, and it's acting like I'm bullish, which is weird because I'm actually not. So if we take a look at what this looks like, P&L wise on expiration. So let's take a looky here. And this is what the trade looks like. For now, I will most likely adjust this. I could actually make a halfway decent adjustment now. And remember, I'm working with I have an extra 10 wide here between the 3,000 and the 29.65. And by that, I mean the difference from this component of the trade to this component of the trade. I have an extra 10 wide on this side of the butterfly that I can use to hedge risk, harvest profits. We'll see, but for now, since it's down decently to start the day, I'm just going to let this continue, and we'll see how this works out.